Good morning. This is Mark Soderberg with ADM Investor Services with your morning ag outlook for Tuesday, August 13th. Well, a lot of red on the screen here this morning as prices are lower across the board. Corn right now is down 3.5 cents on or very near session lows. Soybean prices are down 15 to 16 cents. Products are both lower as well, 2 to 3 in the meal, down about 60 to 70 points right now in the bean oil. And wheat is also lower, but firming up a touch right now, down about 1 to 2 cents. Speculative traders were healthy sellers in the soybean complex yesterday in response to the bearish USDA reports. We had them selling about 11,000 beans, 7,500 meal, and 4,500 in the bean oil. We've got money managers back to holding a record short position in soybeans at about 190,000 contracts. Speculative traders were big buyers in corn yesterday, however, at about 12,000 contracts, which wasn't necessarily just fun short covering, as open interest this morning is showing an increase of about 12,000 contracts, suggesting maybe some additional end users taking on some ownership. After the close yesterday, the U.S. crop ratings were generally in line with expectations. Corn conditions held steady at 67% good to excellent. 60% of the crop is in the dough stage, while 18% of the crop is dented. They're both at or slightly above their historical averages. I think current conditions in corn do suggest an average yield of nearly 184 bushels an acre. That is just above yesterday's USDA record yield forecast at 183.1. I found 7 states that are reporting harvest progress, with Texas and Louisiana leading the way at about 38% harvested, both well above their historical averages. The soybean conditions, they held steady at 68%. Good to excellent, still the highest rated crop in 4 years. 72% of the crop is setting pods. That's in line with its recent history. And here, too, I also believe current ratings would suggest an average yield just above the USDA. USDA yesterday at 53.2, a record yield. I think it's probably now closer to just shy of 54. Winter wheat harvest is winding down at 93%. Spring wheat conditions, they dipped 2% to 72% good to excellent, a slightly bigger than expected drop. U.S. weather just remains non-threatening, with healthy rains expected across the heart of the Midwest this week, keeping both corn and soybean yield outlooks at record high levels. We'll see if corn can manage to muster up a little bit of a turnaround here. So see some follow through from yesterday's key reversal trade. However, with carryout estimates approaching 2.1 billion, I sense that upside limited to about the 4.25 level. The strong USDA export forecasts, I think, will need to be proven over time, given a very weak pace that we've seen so far to date. Soybean prices, it's just real hard for now to imagine much higher trade here, given yesterday's record production forecast on record yields and the surprisingly higher than expected acreage report. I look for Nov 24 beans to challenge the 950 level before month end, despite the record speculative short position, trying to uncover better demand while also trying to discourage South America from plantings, from increasing seedings this year, and those begin next month. Wheat prices are just kind of grinding sideways above the recent contract lows. I do look for Minneapolis to gain on both Chicago and Kansas City, with the much lower than expected spring wheat production yesterday, and given the lower acres and the slight notch down on the yield. Disappointment from the recent Egyptian tender, where they purchased only about 380,000 metric tons, about 10% of their 3.8 metric ton tender, apparently balking at the high carrying costs in the market for wheat prices looking out into Q1 and Q2 of next year. Thank you for listening, everyone. I hope you have a wonderful day.